Hello traders. Today we want to discuss how to begin a step-by-step area wave analysis. How to begin a step-by-step area wave analysis. We are on a monthly chart of Starbucks Corporation. The epic is SBUX. Sierra Bravo Uniform X-ray. This is a NASDAQ 100 component. All right. Talking about a step-by-step area wave analysis, I will show you here how one can begin. All right. A step-by-step area wave analysis. All right. So following our guideline, we can see that there was a trend in phase. That trend in phase started somewhere in 1995. All right. Has ended here, and then we have a correction. So this is an area wave cycle that has started here and have ended here. All right. After this area wave cycle has ended, a new cycle has begun. Now we can see I put a vertical line here because in 2009 the S&P 500 has also started a new bullish trend. At the time when the Starbucks previous cycle was ending, the market itself has begun also a bullish trend, all right? And Starbucks was following the market. So let's begin our wave count. There was a cycle that has ended. Now talking about step-by-step area wave analysis. Usually at the end of an area wave cycle, if the fundamentals are solid, all right, and the market itself is starting a new cycle, there is a high chance that many financial instruments will also start a new area wave cycle. Now understand that the end of the area wave cycle does not mean that definitely we're going to have a new cycle. We will only have a new bullish cycle if the fundamentals are solid and the market itself is bullish. Those are the two conditions. Are they making more money? Are they innovative? Are they gaining more market share? All right. Are they making money? Do they have excellent management in place? Good. Now all these are in place. In the previous cycle has ended. Now let's look at the market. Is the market also starting a new trend? Yes. So there is a high chance that financial instrument with a strong balance sheet, with excellent management in place, gaining more market share, quality financial instrument that have brighter future are likely to follow the market. So with that in mind, it was clear to us that this company, this is the for this company, this is the first area wave. Look at the length of this first wave. So that first wave has taken more than 4 years, 2009, 2010, 2011, and beginning of 2012. So we can say at least 3 years that first wave was in place. It was quite extended first wave. So 3 years before the first wave has ended. Now, talking about step-by-step area wave analysis, the first thing that should come into our mind, a first wave that has taken more than 2 years to be completed, is indicating to us that probably it's an extended first wave. All right? The second thing that is coming to our mind is that if the first wave is extended, all right, there is a high chance we may have a normal third area wave. And also, if we have a normal third area wave, because the first wave has been extended, we may see also equality between the third area wave and the fifth wave. But one more thing I need to say to you, all right? Sometime, if the third area wave is not extended, all right, very often the fifth wave may be extended. This is not always the case. The fifth wave may be extended. And you're going to see it now. So this is the first area wave, extended first area wave. All right. talking about step-by-step Elliott wave analysis. This is the first Elliott wave. So the next thing that we will do after we have identified the first wave, so this is the second wave ending here. All right, the second wave is this one here. What a professional will do, they will look at the internal wave of the first wave, because the first wave has been extended. We can now look at the internal waves of the first wave itself. Okay, why? That's a very good question, very, very good question. The reason is we can use the internal waves of the first wave to forecast the whole motive wave, okay, of the trending phase. We can use the internal waves of the first wave to forecast the trending phase of the new cycle. So as you can see here, our extended first wave has been subdivided into a 5 wave. First minor wave of the first wave, second minor wave of the first wave, third minor wave of the first wave, fourth minor wave of the first wave, and the fifth minor wave of the first wave. If you look carefully, my friend, look carefully, you can see that the first minor wave of the first wave itself is also extended. Can you see that? It has been extended. Can you see that? More than a year, from 2009 up to mid-2010. So that first minor wave of the first wave itself has been extended. So not only our normal first wave has been extended, the first minor wave of the first wave itself has been extended. And then we have this normal second wave, followed by the third wave, all right, and the fifth wave. And there is also equality. You can see that there's almost equality between, okay, this length is almost equal to the length of the fifth wave. There is also equality between the third wave, the third minor wave, and the fifth minor wave of the first wave. With that information, we can forecast that, all right, looking at the internal waves of the first wave, we can forecast that the second wave is likely to be a normal second wave. Looking at the structure of the fourth minor wave of the first wave, we can also expect that the real fourth wave is likely to be a shallow, quick, okay, fourth wave. And looking at the structure of the internal wave of the first wave, we can also forecast that there is a high chance that we may have equality between the third wave and the fifth wave. Step by step Elliott wave analysis. So you can see that as the price going up, traders start drawing out. They say first wave, second wave, third wave, fourth wave, and the fifth wave. Then it pulled back like this. All right. So people will say, "Oh, the correction is about to begin," when they were here. But that correction is just the second wave of the bigger cycle. But you have to understand, that's why I'm saying to you, the Elliott wave count is step by step, isn't it? So if you were here, you'll be going 1, 2, 3, 4, 5, yes or no? And then you'll be saying, all right, a correction is about to begin. But if you stop only on the monthly chart, you will know that a bigger cycle is underway. So to remember the validation of the wave count. You don't want to count the wave on one time frame and use that alone. You want to go to the yearly chart, a higher time frame, to see the bigger cycle. So with that information, by looking at the internal waves of the first wave here, look at this. This is the real second wave. Isn't it good? Yes, it is. Because we have information here. The second minor wave of the first wave itself is just a straight line, indicating to us that there is a high chance, not guarantee. All right, that's what I want. I don't want you to do. Don't use the Elliott wave like a science. There is a high chance that the real second wave is likely to be a straight line like this. Look at this. Boom. So after that, so we have the second wave. We also know that, all right, the first minor wave of the first wave has been extended, and in this case we have a normal third minor wave because it was not extended. You can see that this third minor wave of the first wave was not extended. So normal third Elliott wave should not go above the 161.8% Fibonacci extension level of the first wave. So if now I'm applying Fibonacci extension to the first minor wave of the first wave itself. So we will be watching a 161.8% Fibonacci extension level. That's the line here. You can see that the third Elliott wave did not exceed that 161.8%. The third minor wave or the first wave did not exceed the 161.8% Fibonacci extension level of the first minor wave or the first wave. Here it is. So with that information, looking at the internal waves of the first wave and using those internal waves to forecast the real fourth wave, we will expect the real third Elliott wave not to exceed, okay, the 161.8% Fibonacci extension level of the real first wave. So where is that level? The 161.8% Fibonacci extension level of the real first wave is this one here, this line here. So this is the real first wave from here all the way here. And you can see that with the information that we have here, we will expect the third Elliott wave not to go above this level here. Now remember that this is not an exact science. Sometimes you may see you may look at the internal wave of the first wave, but the price may go above that level. But our first expectation, because of what has happened during the first wave, our first expectation will be that it has a high chance not to exceed the $48. But remember that the price can go above it. The price does not have to fulfill our expectation. We will not impose the Elliott wave on the price. We are following the price. So our real third Elliott wave is from here to here, which is below the 161.8%. So now we have a normal third Elliott wave. Color it in orange. This is the normal third Elliott wave because it did not exceed the 161.8% Fibonacci extension level of the real first wave. Step by step Elliott wave analysis. That is concluded. So now we have a normal third Elliott wave according to the Elliott wave principle. All right. The third Elliott wave should not be the shortest. You're going to be surprised soon, my friend, because of what is happening here. Should not be the shortest. So we are talking about the length or the magnitude of the third wave. So I'm going to use the magnitude, so from the top to the low. There's something strange here. So now that the reason why I started this video step by step Elliott wave analysis, this is the challenge that we face when we are counting Elliott wave one step at a time. So we are here now, okay? All right? We are here now. So looking at the internal wave of the first wave, we will expect the fourth wave to be also a straight line. This is an expectation. All right? This is an expectation, okay? All right? So then we will say, okay, third Elliott wave. We will say fourth wave is this one here. We color it now into pink. So far, as we are counting Elliott wave, we are checking whether we are violating any Elliott wave principle, i.e., the fourth wave should not overlap the first wave. So therefore, I'm going to put a line at the high of the first wave. You can see that the fourth wave did not come into the range of the first wave. So no violation of the Elliott wave principle. But we need to pay attention to the length and the magnitude of the third wave because it shouldn't be the shortest wave. All right, remember that. But look at that. The first wave has already been extended. All right, and then we see the third wave like this. So, because the third wave should not be the shortest wave, correct? All right, correct. We will say there is a high chance that the fifth wave will be equal to the third wave or be lesser than the third wave, because if the fifth wave is longer than the third wave, that will be an Elliott wave principle violation. So with that, going one step at a time, going step by step, we'll project the length of the third Elliott wave right here and say, okay, we do not want the fifth wave to go above that level. Because if the fifth wave goes beyond that level, that will be an Elliott wave violation, which means the third Elliott wave will be the shortest wave. All right? Yes or no? All right? So now, we will draw that line there, $54.50. We'll also check the magnitude. So trader use both the length and the magnitude. This is the magnitude of the third wave. And we will also project it here. I will say, okay, it's just a little bit above that line. So somewhere in that zone. My friend, you'll be surprised what is happening here right now. That's why I titled this Step by Step Elliott Wave Count. So you can see the reaction of the price in this zone. Look at this one. Look at the tail of this candle here. All right. The reason why there was a bit of volatility here is because you can see if I draw another line to highlight where when we use the magnitude, so trader will be watching this zone. So they will say the fifth wave should not exceed this level. Yes or no? All right, my friend. So there were already orders placed here to sell this stock. All right? And as the price reached that zone where a lot of Elliott wave traders were expecting the fifth wave to end, so that we do not have the violation of the Elliott wave principle, which means fifth wave equal to the third Elliott wave in length or in magnitude, there were orders placed here to sell, expecting the end of the fifth wave right here. You can see the reaction of the price, how the price came down. Okay, you can see it came down almost here. See, came down all the way here to the high of the third wave, trying to return the high, pew down. All right, to sell here. But something strange has happened here. Look at my friend. Though we were expecting, okay, this is what I'm talking about. Though we were expecting the fifth wave to end here, you can see that people sold it here, acknowledging that the fifth wave should end here. Now, something else has happened. You see what's happening here? I'll try to explain to you. This is the challenge that we face sometimes when we are counting Elliott wave. There is another example that I will be recording another video to show you, and so you may be aware of it. When you are counting Elliott wave, at one stage you will face those challenges, and you may be wondering, why should I do? Just flow with the price. Okay? All right? Just flow with the price, because you are counting your Elliott wave step by step, as I did here, and now you reach this level, and then you reach this level. Now you are here. Okay? And you are expecting the end of the fifth wave right here. But if I remove this line, you will see that something else has happened. Our fifth Elliott wave has been extended. So remember that we are counting Elliott wave step by step. So we don't know what the price will do until the price is doing it. So we label this third Elliott wave. Now we are here. So we see it start coming out. It's 1, 2. Okay? And then it went up a bit, right here, okay, and then he pulled back a bit. Because he got a tail, I will leave my pullback here. I will not go all the way here because the price went all the way down here, but it quickly went up to close here. So I will use the closing price and stop it here instead of pushing it all the way here. I will be talking about this. There's another example. I will be talking about this, okay, where traders first challenges where they are using the Elliott wave. Look what the price did. It is an extended fifth Elliott wave. It is an extended fifth Elliott wave. Is the fifth wave, is the third Elliott wave now the shortest wave? All right. So at this stage, what usually takes place? So you'll be saying, all right, now it looks to me that our fifth Elliott wave has been extended and it's also longer than the third Elliott wave. That's incorrect. Yes or no? You will say that's incorrect. That's incorrect. That's incorrect. Yes or no? So you will be saying, okay, all right. So now you see, okay, all right, something's not adding up here. So we will say, all right, probably our wave count is wrong. So we will say, all right, probably this is just the first minor wave of the third wave, and this 1, 2, 3 is the second minor wave of the real third Elliott wave. I'm going to color them all into qual. Now you are seeing the challenge, how you are the wave count. We are going one step at a time, and sometimes you see all these kind of challenges and how you handle it. And then you may say, all right, this is the third minor wave of the third wave itself. And you may say, all right, George, this is, try to color this one here. Hold on, please. I'll color it before I minimize it. And then you may say, George, this is the fourth minor wave of the third wave. And George, this is the fifth minor wave of the third wave. So you'll be saying, George, the third wave should not be the shortest wave. When I label this only as the third Elliott wave, now it looks to me that the fifth wave is longer and the third wave is the shortest wave. This is a violation of the Elliott wave principle. Therefore, probably this is the real third Elliott wave. Now, what do we have? Step-by-step Elliott wave analysis. So now, you may say, all right, George, so in this case, first wave has been extended, third wave also has been extended. It's possible that the first and the third wave may be extended. All right? Remember that the first, the third, and the fifth wave can be extended. All right? So now we have the first wave that is extended, the third Elliott wave is extended. Now the question is, my friend, is this the fourth Elliott wave? Or are we going to have the real fifth wave up somewhere here later? That is the question. All right? Now, look at this. If right now the price continuing, this is what we are talking about. Remember the title of this video, how to begin a step-by-step Elliott wave analysis. And you will first, with this challenge at one point, where you will be counting your wave, and you will see that there is a violation as you are going one step at a time, all right? And then you will adjust your wave count, and then you will draw your line differently. But you will be surprised sometimes. The price, as it's going down now, it may continue to go down and become completely, okay, a correction. Looking at the structure of this price move down here, you can see it looks to me in my view, it looks to me that the correction has already begun. It looks to me that the correction has already begun, that we are likely to see a flat correction. But the point that you need to understand is that though the first wave count that we have done is a violation of Elliott wave principle, the most important thing is that we are not violating the market pattern. The price is above, okay, this bullish trend line, and it's going up. She's pulling back, trying to retest this level. Is this the fourth Elliott wave? That is the question. All right. Or, my friend, if I go back to my first drawing, is this price move, this one here, which you color it now into pink, a distortion? This move up, is it a distortion? Because if we did not have this move up, we won't have an Elliott wave, okay, a violation. Is this a distortion? One of the challenges that we face when we are counting Elliott wave is that sometimes we have distortions. Now it's down to you to analyze the price and to know what has happened there. All right. So I leave it to you now. So is this the fourth wave? Personally, as I count my wave up to this point, and I see, you can see here this sharp move down. You can see this sharp move down. It's because a lot of Elliott wave traders were doing exactly the same thing that I was doing, and they were expecting a correction to begin here. That's why the price went down very fast like this. But for one reason or another, the price quickly recovered and continued to go up. Now we see this pullback here. What is happening here? Personally, what I will do in this stage, I will put a vertical line here because that's where the confusion has started. Though I have adjusted my line to see what other traders may see to avoid the Elliott wave violation. What I will do personally at this point in time, I'll put my vertical line here because I do not want to forget what has happened there. And I will stick to my Elliott wave count. My first Elliott wave count, I'll stick to it. I'll call this fourth wave, 1, 2, 3, fourth wave, and I'll call this one the fifth wave right here. Though the price continue to go up, I'll leave my vertical line here, and I will monitor. I will just keep watching this, and if I want to trade it, I will be thinking that probably other traders are thinking that this is the real fourth wave. But I will leave on my chart my first Elliott wave count, knowing that there was a reaction here, the tail of this candle. When we were counting the Elliott wave step by step, we were thinking at this point in time that this is the end of the fifth wave. I'll leave it on my chart like this. But I'll also acknowledge what is happening here. If I want to trade it, well, as it is now, I'll leave a line there. Say priority to bullish signal above 5187. Priority to bullish signal above 5187, and priority to bearish signal below that level. All right. This is the end of this tutorial about how to begin a step-by-step Elliott wave analysis. Because as the price is moving up, we are counting Elliott wave, and we are labeling Elliott wave, and we are applying the Elliott wave principle until we have noticed that there is an Elliott wave violation. Then we readjust our Elliott wave count. But at this stage, personal decision will count because a lot of traders will see the tail of this candlestick bar and will be wondering, is this the end of the fifth wave, or are we expecting a new fifth wave? That is the question. The area we count can become sometimes very challenging. There is another scenario that I will record another video to show you, when on the monthly chart we have a long tail that creates a violation of area we count. But I also understand that sometimes traders will discount the tail. So you see here, these candlestick bars, the tail of this, they will discount it. They will say it went down all the way here, but it closed up. So therefore, they will say there is no violation. For instance, if suppose you were here, you are saying, suppose, let me explain this to you. But I will be recording. Suppose you here, say first wave, second wave. All right. Now the second wave, suppose here you have a long tail. This candlestick bar got where are we normally? I will do it for the fourth wave right here. Suppose you were here, and the fourth wave should not overlap the first wave, yes or no? But suddenly you see a candlestick bar with a long tail, which means it goes into the range of the first wave, but gently, it quickly closes on top of the high of the first wave. But the tail is still there, but the closing price is above the high of the first wave. Is that an area wave violation? We will be talking about it in another video. This is the end of this tutorial about how to begin a step-by-step area wave analysis. I hope you have learned something from it and will improve your area wave analysis, and most importantly, avoid area wave analysis mistake. If you have any question or suggestion or comment, put in the comment section, and in due course, all right, I will be recording another video to answer your specific question. With this video, express your view. What do you think? All right, will you continue? Will you adjust your wave count, or will you stick to the first wave count and stop exactly, all right, right here, or will you adjust your line? Do you think that we will have the real fifth wave? All right, I would like to know. Okay, please let me know in the comment section. All right. We wish you the very best in your training, and until the next time, enjoy yourself and be very happy. We are the TSTWSYS 008 trainers, talking about how to begin a step-by-step area wave analysis. The financial instrument that we were analyzing is a Starbucks Corporation Epic SBUS, a NASDAQ 100 component. Thank you for watching, and speak to you soon.